Hello, I'm Jay Lerner, the Inspector General at the Federal Deposit Insurance Corporation, the FDIC. I'm pleased to announce our annual report identifying the top management and performance challenges facing the FDIC. The purpose of this document is to summarize the most serious challenges at the agency and briefly assess its progress in addressing them. The FDIC plays a unique and vital role in support of the U.S. financial system. It insures approximately $9.5 trillion in bank deposits at over 4,900 banks, supervises and examines more than 3,200 banks, oversees more than $123 billion in the Deposit Insurance Fund that protects customer deposit accounts, and resolves failing and failed banks. Our top challenges document is based on the experiences and observations that we have gained from our oversight work, reports by other oversight bodies, review of academic and relevant literature, perspectives from other government agencies and officials, and information from private sector entities. This year, we identified 9 top challenges facing the FDIC. And our report incorporates and consolidates discussions of the risks identified in prior years and updates our assessment with respect to current conditions and circumstances. Also, we added a new challenge regarding the FDIC's collection, analysis, and use of data, and we have highlighted the importance of governance to ensure the effective execution of the FDIC's mission. Joining me here today to discuss these challenges is Terry Gibson, our Assistant Inspector General for Audits, Evaluations, and Cyber.
Thank you, Jay. A key challenge for the FDIC is its readiness for crises. The FDIC faces challenges in fully developing its plans to respond to an unfolding crisis. The FDIC should consider climate-related risks in its planning, including in its supervisory and examination processes. The FDIC should also be ready to respond to evolving risks associated with the current pandemic and other crises, including supervising and examining government-guaranteed loans at banks and related fraud risks. Cybersecurity for banks and third-party service providers is another significant challenge area. FDIC examiners need to have the appropriate skill sets and knowledge to conduct information technology examinations that adequately identify and mitigate cybersecurity risks at banks and their third-party service providers. The FDIC should also establish a process to receive, analyze, and act on reports of significant cyber incidents at banks in order to adjust supervisory strategies, policies, and training for bank examiners, to warn other banks of such threats, and to prepare for potential bank failures. Crypto assets can also pose risks to banks due to their anonymous nature and the increased risk of money laundering and other wrongdoing. A third challenge for the FDIC is supporting underserved communities in banking. The FDIC needs to ensure that its programs are effectively designed to foster financial inclusion and reduce the number of unbanked and underbanked individuals. The FDIC's examinations should continue to ensure that banks are in compliance with regulations that combat discriminatory lending practices. And FDIC examiners need to be able to assess the effect of banks' use of artificial intelligence in decision-making and minimize any undue bias related to the algorithms or historical data used. This year, the challenge of organizational governance at the FDIC took on added importance. The FDIC faces challenges in providing clarity concerning the submission of motions presented to the Board of Directors for consideration and approval. The FDIC should further ensure that the Board, through its Audit Committee, can oversee and manage the risks identified and monitored through its Enterprise Risk Management Program. The FDIC also should clarify under what circumstances and which portions or provisions of executive branch policies or guidance are to be followed. The FDIC needs to correct weaknesses in its programs and address recommendations in a timely manner. FDIC rulemaking and guidance should also be aligned with other regulators to ensure that banks are not treated differently depending upon their primary regulator. FDIC internal guidance also should be clearly defined to ensure consistent application of FDIC program requirements. And FDIC rulemaking should be transparent, analyzing the need for safety and soundness regulations and the compliance burden placed on banks. Information technology security at the FDIC is a long-standing challenge. Security control weaknesses of FDIC systems limit the effectiveness of FDIC controls, which places the confidentiality, integrity, and availability of FDIC systems and data at risk. The FDIC should address its outstanding corrective actions related to IT security controls, management of privileged administrative accounts, and oversight and monitoring of information systems. Effective security controls are also needed for FDIC mobile devices and for the automated systems that monitor and control critical building services at facilities. Security and privacy at the FDIC are important concerns and carry challenges. The FDIC should continue to manage risks associated with its personnel security and suitability processes to ensure that employees and contractors undergo appropriate and timely investigations and reinvestigations commensurate with their positions. As well, the FDIC should maintain its risk-based physical security program and ensure that its work environment is free from discrimination, harassment, and retaliation. Effective programs are also needed to safeguard sensitive and personally identifiable information that the FDIC possesses. The FDIC's collection, analysis, and use of data is a new challenge this year. The FDIC should establish a written governance structure and implement a charter to establish a common understanding of its threat information sharing program and define an overall strategy and requirements for it. Effective sharing of threat information helps the FDIC to protect the DIF and the financial system by building situational awareness, supporting risk-informed decision-making, and influencing supervisory strategies, policies, and training. In that regard, the FDIC should develop goals, objectives, and measures to guide the performance of its intelligence support program, and it should establish adequate policies and procedures to define program roles and responsibilities. The FDIC faces challenges in the 4 component functions of threat information sharing: acquisition, analysis, dissemination, and feedback. The FDIC also should improve the reliability of its internal data to ensure that the FDIC board and senior officials can depend upon the data to assess program effectiveness throughout the organization. The FDIC faces challenges in contracting and supply chain management as well. The FDIC faces challenges to ensure that it receives goods and services according to contract terms, price, and timeframes. It needs processes in place to identify and ensure heightened monitoring of contracts for critical functions, to maintain control of its mission-critical functions and prevent over-reliance on contractors. The FDIC also should have programs in place to manage and mitigate security risks associated with the supply chains for contracted goods and services. Further, the FDIC should ensure notifications to contractors and subcontractor personnel so that they are advised and aware of their whistleblower rights and protections and know how to report allegations of misconduct, violations, and gross mismanagement. The 9th challenge area relates to human resources at the FDIC. The FDIC faces challenges in managing its human capital life cycle. At the present time, nearly 25% of the FDIC workforce is eligible to retire, and this figure climbs to nearly 40% within the next 5 years or by 2026. These figures include personnel in key divisions supporting the FDIC mission, including the divisions of resolutions and receiverships, finance, administration, and the legal division. The FDIC should continue to improve its program for the retention of employees and its collection and analysis of relevant personnel data. In addition, the FDIC should continue to ensure diversity and inclusion among its workforce. Meeting these challenges is especially important as the FDIC shifts its operations to a hybrid work environment. Back to you, Jay.
Thank you, Terry. We believe that this researched and deliberative analysis is beneficial and constructive for policymakers, including the FDIC board and officials, as well as congressional oversight bodies. We further hope that it is informative for the American people to learn about the programs and operations at the FDIC and the challenges that the agency faces. To find out more about these challenges and our other oversight work, please visit our website at fdicoig.gov, and you can follow us on Twitter at FDIC_OIG. If you suspect fraud, waste, abuse, or mismanagement in FDIC programs and operations, or at FDIC banks, please contact our hotline at the same website and click on the red box in the upper right corner. Thank you for joining us today.